Hi, I'm James Nelson, Vice Chairman of Cushman & Wakefield, and I'm here to bring you the Nelson Report's July 2016 video exclusive. I'm here with Ken McCarthy, who's Cushman & Wakefield's principal economist.
Good afternoon, Ken.
Hi, James.
Good. Thank you so much for coming in. I know it's been a whirlwind since the announcement last week for Brexit. What are the global implications that we're looking at?
So I think, first of all, it was a shock. Pretty much everyone expected going into the vote that the British would vote to stay within the European Union. So markets immediately had to account for that, and that meant in generally dropping pretty rapidly, particularly equity markets. When you step back and think about what it means, though, it's probably not as dramatic a result in terms of its impact on the U.S. U.S. trade with the European Union is not that large. If there's going to be an impact on the U.S. in terms of the economic impact, it's most likely going to be through equity prices dropping and causing confidence to drop, that kind of thing.
And how about on real estate values throughout the U.S. and specifically here in New York? What are we expecting?
So we would expect that we have a global environment that's been accumulating capital and building up capital to invest in real estate over the past several years. Real estate has become much more of a core asset for portfolios than it was in the past. And so we've seen a lot of funds raised to invest in real estate globally. Now, all of a sudden, one of the major places to invest has more questions about it than it did before. In a situation like that, investors, particularly conservative investors, are more likely to look to other locations, and we would expect that the United States would be the first place that they would look. So we would expect that the sort of intermediate term, the short-term and intermediate-term impact of this vote will be for more capital that might have gone to the UK or to Europe to turn and instead go to the US, and particularly New York, which has always been the market that's attracted the most investment of any US market, especially the most foreign investment. It's the most well-known, the most liquid market. So you would expect to see a lot of that capital find its way into the US.
No, that definitely makes sense, and there is a huge amount of focus previously on both markets, and then actually looking at Real Capital Analytics reports for 2015, New York City had a record year with $79 billion in sales, but London had $53 billion. They were the number 2 market in the world, and I believe there was only 2 other cities around the world in that top 10. The rest was in the U.S. So there is a lot of capital that's been deployed in that market. If it now finds its way to the U.S., that could be hopefully a good thing for us.
Yeah.
The other thing that I found interesting in the Real Capital Analytics report was the amount of cross-border capital. So if you look at cities and their investors looking outside, London is actually has been the top producer of cross-border capital. I believe close to $40 billion, where New York only exported about $25 billion. So what happens to those investors from London? Are they still going to have capital to deploy outside their walls?
That's a good question. I would expect that in the near term they probably will. In an environment where the local market is now more uncertain, what's going to happen to London property values? I don't think anyone really knows yet. That you would, if you do have that capital to deploy, you would probably deploy capital that might have been invested locally abroad as well. So I think near term probably remains about the same, maybe even increases. Longer term, it will depend on how the economy performs. I think if the British economy weakens, goes into recession because of this, then it's likely that less capital will be available to invest in the first place.
As far as any negative implications for the U.S., so if we have a stronger dollar, that's probably going to make it more challenging for international tourists to come here to spend, to shop. So does this have a negative impact for hospitality, for retail?
Well, I think, first of all, you're talking specifically about New York, I think, but we have to remember that New York is number 1 or number 2 tourism-driven city in the country. It's either Orlando or New York pretty much all the time. But a lot of the tourists who come to New York are from the U.S. Only about, I think
it was 13 million was international out of the 55 million.
Exactly.
So
most of the visitors are local, are U.S. based. But the foreign visitors do tend to both stay longer and spend more money. Mm-hmm. So we could see a slowdown in that visitors from Europe, especially with this combination of a stronger dollar and a weaker European economy. I mean, we had, in 2008, 2009, we had the number of tourists continue to increase because the dollar dropped. So if we get this combination of both weaker Europe and a stronger dollar, we could see a slowdown in foreign visitors, particularly from the UK. I wouldn't be at all surprised to see that.
Good. So I always like to try to end on a positive. So we already talked about increased demand for the U.S. and New York City. What about for the residential market here? There's no doubt that London was probably the biggest competitor with New York for the ultra high-end space in the market. And that's an area where we have, I believe it's about 8 years of supply of $10 million plus apartments. So are we hoping that maybe now with some diverted capital that might help us sell off some of that inventory?
Well, I think it's if you are a rich foreign owner of if you have a property in New York, you have a property in London, would you be more likely to sell that one in London and move to New York? I'm kind of on the fence about that. I think the people who are buying the $10 million plus apartments, they're not going to be that concerned about what's going on in London. They may look at it as an opportunity. I mean, with the price down, or with the pound down, I should say. So, I can't see it having a huge impact. I do think that the ultra high end is an area of the New York market, one of the very few areas of the New York market that is facing probably more challenges than anywhere else. But overall, I don't see this changing, where people are going to buy their apartments.
Okay, fair enough. Well, thank you again for coming in today, and time will tell.
Okay,
great. Thank you.
Pleasure.